Okay, folks, Thursday the 16th, it is ECB day here in Europe. So it's just gone about 14 minutes past 9 GMT. And what we've had in the overnight is the bailout. So Swiss National Bank, SNB, coming out with a loan to Credit Suisse for about 52 billion. Now, the bank's market cap is 8 billion. So just kind of think about
So
that,
just
right?
taking a look back to
Sorry,
the
hold on a sec.
markets, the
Let's just mute Tony there. Thanks, Tony. So yeah, look, what's been going on and why I haven't been on with a pre-US for the past couple of days for YouTube. We've been doing it here in Duggan Capital twice during the day. It is that I have been short DAX over the last couple of weeks here, and really just trying to manage this trade as we go down. I've posted my positioning actually on Twitter, but let's get the DAX on the days up here, and we'll just get rid of that B stocks for now. All right, so shorting against here. Why was I shorting against here? Really, the market was struggling, really struggling up here, and we had quite a lot of central bank chatter, mainly around the Fed as opposed to ECB. And then, of course, we have SVB then we have SVB, Silicon Valley Bank collapse, and ahoy, down we go to the downside. So we're loving that one on the short. So we're coming into some pretty decent areas down here. Been taking some profits into like the 15s, but I'm looking actually to come down 14,409s. New lows now on DAX on the day here, guys.
Dow value.
Obviously these are weekly bars, so I'm looking at 14,409s and lower for this. So I am holding this thing for dear life. I got married to this trade. It was a lovely wedding. So I think we can go lower on stocks. Look, we're looking at DAX, Euro stocks, a bit of Dow here, Bund. But really, what's happened overnight is that's really important. We have this big thing that, the traders in Duggan Capital use, and it's like as market information is like, okay, you're looking for something to happen for your trade to set up, but then it's equally as important of what has not happened. Okay, what has not happened? So therefore, maybe we want to take the opposite view on the trade. Okay, and really, what has happened overnight? 15 minutes after the close last night, 9:15, the Swiss National Bank flipped on their opinion. We started off yesterday morning 6:30. Swiss National Bank said they would not support Credit Suisse. Credit Suisse is also largest Saudi investor said they will not go in because for technical reasons, if they go to a larger percentile ownership, it causes very big problems for them. He shouldn't have said that in an interview because that has kind of caused that upset on Credit Suisse yesterday. So we were down about 25% on Credit Suisse. I think it got halted twice, down at 15% and then down at 20 or 25. Either which way, the stock now on the back of that Swiss National Bank bailout or loan, if you like. We were up 40% on the open. We're now holding, I think, about 25% up on Credit Suisse. Either which way, you would then expect European equities and US equities in sympathy at this time of day to rally on the open. Well, guess what? We're down 0.6% on the DAX. So what has not happened what has not happened is a rally from these lows. And so this is why 100% we're only coming around the first or the second turn in what is going to be a 4 or a 5 turn bear trend down and a sell off. Okay, and that's my view. So just to precursor everything. All right, so now let's have a look at these markets. Now let's go back. Now I'm gonna show you DAX and then go to the S&P because at this time of day the DAX is driving US equities. Okay, then when we come past for me around the half 12 marker forward, that drive switches over to the US market. Then starts to drive the equities picture. Okay, and that's really just how I look at it. Other people look at it in other ways. All right, so we had a really nice target here. This area on the DAX, sort of the high of the week of the 28th of Feb last year. the low of this area is the low of this area is the high of that week, and the high of this area is the high of here. So I just like a lot of the excess here, right? And so that's indicative that when we were below and rallying into here, sellers stepped in and drove this market way lower at that time, right? But now we've been above. Okay, when we come down here, buyers will try and lift this market from here back up, okay, to get the inverse of what's happening here. So isn't it going to be really important that this market holds this area? Because if it doesn't, we're essentially using supply and demand. New lows on the DAX on the session right now. We're down 0.8 here. Bunds also moving down from highs. What's important here is that we will come into, if you think about supply and demand, and what is underneath here, whole lot of supply. You have demand. Supply and demand works like this. Here is a demand area where the market demands contracts, wants to own contracts, hold contracts, and here is a supply area. Then way like using just this leg here, right? So if we push below this line in the sand, well, it's going to open up the gates for me and on this trade, and I think we're going to trade to the pre-COVID high ultimately when all is said and done. So we're just I'm going to take that off, but you know, on these weekly bars, but you can do your own analysis. Okay, let's then move over to looking at these US markets. We got NASDAQ up, we got SPOOs up here. Let's look at the SPOOs on a daily chart. Now, I have been preferring or European equities, given the volatility is just a little bit too much. Too many levels get blown out on the US equities, whereas on DAX it's a little more controlled. So especially if you're operating a lot in the daytime environment, but I'm in swing mode at the moment, right? But yeah, so we are down here testing the 38.94s, which was this low of the 20th of May 2022. It's just kind of a bit of a marker, a bit of a temperature check on this market, but I do think we are going to be going lower on this thing. Let's move way out here, weekly bars, to have a look. Yeah, okay. All right. So this is the weekly bars. What are we seeing here? Well, yeah, you know, just firm supports coming in. I'll just update this area here. We'll probably do a little bit of this for now. But yeah, I think we're going down, to be honest. I know there's a lot of dip buyers stepping into the market here over the last couple of days, but guess what? They're underwater or they're dead. All right. So, you know, yesterday we saw actually on the daily, if I go back to a daily here, we saw a huge amount of delta increase on the bid side. So positive delta at around 4, I think it was. And it just couldn't get anywhere. Just couldn't get anywhere, you know? So, you know, that was in around here. So that means that buyers are stepping in, and sellers are just taking them, and the market just is not able to make any significant gains. That's called absorption of the buyers. The inverse is absorption of sellers, whereby the market is holding an area. The sellers are going at it big time, so you would have an increase in negative delta, but the market just isn't actually moving down. That's absorption of sellers. But we saw the inverse, absorption of buyers, yesterday around 4 o'clock. Anyway, I thought that was quite key, and that's certainly a concept that we teach and use in Duggan Capital. Anyway, really interesting to see that. So 38.94 is a bit of a line in the sand. Not able to hold balance above this area, 39.29 to 38.90s. I'm going to be using this area to potentially trade on SPOOs today, although, as I've said, for volatility reasons, I just am not a fan of SPOOs at the moment. It's, you know, everyone's getting stopped out all over the place. Longs, shorts, swingers, scalpers. It's crazy. All right, another thing that we're using in the morning is the VSTOXX, which is the European Volatility Index. And you can see this thing is really on the bid here. 30.25s is a destination. Also, 31.89s is a destination. If you want to know what all these things are on my chart, please do give me an email, tim@duggancapital.com, and and we can tell you all the secrets of Fatima or whatever we are doing here. That's the Alpha Pro Edge. All right, but VIX as well yesterday was up about 20, I think 20%, 17%, something like that. So obviously VIX buyers are here to stay as well. And then oil. Look, I'm not trading a lot of oil. No, some of the guys were trading very, very busy a day on oil yesterday trading. I was more focused on the risk on, risk off picture on Europe, which has been delightful. But I think, look, 63.14's target on the downside. What is that? It is the high of the 6th of July 2021, right? That's where we're going. So you see this is a bit of a jump point for the market on several occasions, especially as we came out of the COVID lows in January 2022. This was the jump off point. Now, quite a lot of questions yesterday of where is the White House, Tim? Where is the White House? Because they are buyers on 70. Well, yeah, they're buyers on 70, but they will be buying in blocks of tons of crude. They're not in this market, they're not in there with a Sierra chart and a trader like me. They're picking up the phone, they're calling Trafigura, they're calling all these guys and saying, right, I want a March settlement for a gazillion tons of WTI or Texas Intermediate or other grades of crude. So it's not like you just come down to 70 as you have seen and then there's a massive bid. That's not how it works, unfortunately. Buyer of 70 for the White House. But do be aware of $70 is a huge handle here, but I think we're going down to 63.17s. There is room for us, I think, today to rally back to 70s. And then I want to see what's going on. And then obviously there's this gap above 71.35, which got closed very quickly there yesterday. Anyway, big day down for oil. I don't like trading oil at the moment. I like trading what's moving and what is current and what is selling off big time here. Bund back to the lows. We're short the Bund here as well. Things just acting a bit differently. Okay, let's calm it down. What we have today is Christine Lagarde set to come out for the European Central Bank interest rate decision. She said on numerous occasions it's going to be 50 basis point hike. That was all said before we had this SVB bank failure contagion risk spreading to Europe. A lot of people in the market coming out saying, well, given this contagion risk in the banking sector, Christine's probably just going to not hike at all, which I think is absolute bullshit. I don't buy into that at all. Or she's going to, instead of 50, she's going to do 25. For me, I think she's going to stay the course. She's going to do 50. The market isn't expecting that. And we're going to drop on bonds and we're going to drop on stocks because it's more hawkishness and it's more interest rates going up. More hawkishness means down on stocks. More interest rates means down on bonds. So that's what I'm looking at. That's why I'm short stocks. That's why I'm short bonds here. And it's happening. Okay. So watch out for this decision today. I think the market is offside and it's pricing in of a 25 basis point hike instead of a 50 for the ECB. And I think we'll talk about the Fed and the FOMC hike for next week, which is coming next week. So 6 o'clock next week is a statement release. So on Wednesday. All right. Listen, be careful out here, guys. You don't even have to trade a lot of this volatility if you don't really understand the macro drivers at the moment. That's fine. You don't have to step in here. But for our traders, there is money being made here, guys, and some amazing trades being put on. And so, listen, we'll sleep. We'll sleep when this is all over. April would be a good time to get some sleep, I reckon. All right, take it easy.
Apollo 11, this is Houston. You are confirmed to go for orbit. Roger.